If you want to invest in real estate, but you don't have the time to find deals, analyze deals, and all the other stuff that comes along with real estate investing, there's actually two ways that you can invest in real estate passively. The first way is being a private money lender. We've used around $19 million from individual private money lenders to flip around 200 properties. And how it works is when we get a house under contract, we'd reach out to our private money lenders, and they would typically fund us 100% of the purchase price as long as it was at least 75% below the after repair value. So say we got a house under contract that's worth $200,000 after it's completely remodeled. The private money lender would typically loan us a maximum amount of $150,000. So if we got the property under contract for $120,000 and it only needed $30,000 or less in repairs, that's a no money down deal. Those are the kind of deals that I really liked. Now this process would work very similar to any other real estate transaction. The private money lender would have their attorney draft the deed of trust and a promissory note, and everything would close at a title company. So at the title company, that's where all docs are signed, and the private money lender has a checklist that their attorney has drafted, just saying, hey, when these items are done, you are free to disperse funds. Now, as far as terms go, they're very flexible, and it's one of the reasons why I really enjoyed working with private money lenders. So just determine what you're looking for as far as an interest rate, origination, the duration. Do you want a 6-month term, 12-month term, or do you want something longer, 3 or 5 year term? Do you want monthly payments? Do you want payments to be quarterly, annually, or maybe in the case of a flip, you just want it to accrue and everything get paid out at the end of a 6 or 12 month term? You get to decide that. Now you definitely want to know what position your lien is in. You want to be in a first position lien because that has the least amount of risk. In a worst case scenario, you're the one that's going to get paid back first. If you are in a junior position, it should be at a higher rate to justify the additional risk that you're taking. Now the second way you can passively invest in real estate is by being an equity partner, where private money lenders, being debt investors, are only getting a certain rate of return depending on whatever their promissory note says. An equity investor is getting a piece of the action, a piece of the upside of the property. Now this can look a million different ways. You could be splitting it 50-50, maybe for a single family property, or for larger multifamily, could look something like an 80-20 split where 80% is going to limited partners like you that are passive investors, or maybe a 70-30 split, 60-40. You can slice this up any way you want. For example, if a preferred return was 6%, it means the first 6% is going to be paid out to the passive investors pro rata depending on what their contribution is in the asset. After that, then profits will be split up. Now, this can look a million different ways, and there could be other variables in the waterfall structure, waterfall being how the funds are going to be flowing out to the operators and investors in the project. The third way to passively invest in real estate is actually a blend of being a private money lender and an equity partner. Some private money lenders also take a piece of the equity. Regardless how you invest in real estate, you have to underwrite the operator. The operator is far more important than the deal or the rate of return that the operator is promising on the deal. And this goes far beyond just looking at their pitch deck. If you're passively investing in real estate now, share your experience in the comments. I'd love to hear from you. Thanks.